Welcome back to the Neuro Finance Masterclass. We are absolutely thrilled to have you here for day 59 of our 365 Days to Financial Freedom series. So yesterday, we laid down some seriously crucial groundwork, right? We talked about reading the footprints of the whales using candlestick charts. And if you caught that explainer, you're already looking at the financial battlefield totally differently. You know exactly where the big money is stepping.
You absolutely do. You can see the entire structure. But, seeing the battlefield, that's really only half the war. What about the psychology of the market? Like, how do you actually measure the raw emotion out there? It's easy enough to just say, oh, people are greedy right now, or people are scared. But having hard, actionable data to back up those feelings, that's a whole different ballgame.
Which brings us right to the absolute core of today's explainer. How do you mathematically prove if the crowd is blinded by greed or completely paralyzed by fear? I mean, it sounds impossible, doesn't it? Emotion is messy, it's human. But here's the thing. In the markets, emotion actually leaves a mathematical trail.
Exactly. We are not out here guessing. We're definitely not putting our capital on the line based on some random gut feeling. So today, we're introducing the ultimate mathematical solution to emotional trading. We like to call it the architect's thermometer.
And the real name for that thermometer is the Relative Strength Index, or simply the RSI. Now, this is a momentum indicator. It typically just hangs out right at the very bottom of your stock or crypto chart, totally out of the way of the actual price candles.
Right, and what is absolutely critical to grasp here is the math that's humming away behind the scenes. The RSI calculates the speed and the size of recent price changes. But let me be super clear about this. It does not tell you the price of the asset. The price could be $10, it could be $10,000. The RSI honestly doesn't care. It solely tells you the temperature of the market. And remember, in Neuro Finance, we aren't using this tool to day trade. No way. We use it to protect our hard-earned capital from our absolute worst enemy, which is our own emotions.
So to pull that off, the RSI just spits out a single, incredibly simple number on a scale from 0 to 100. That's it. It's a perfectly closed loop.
Yeah, think of it quite literally as a thermometer. 0 is freezing cold, and 100 is boiling hot. Whenever you're looking at an asset and you start feeling that familiar itch, that urge to buy or sell, this 0 to 100 scale is your absolute, undeniable thermometer for market emotion. It strips away all that noisy internet hype and just gives you the cold, hard temperature of the crowd.
All right, let's dive into part one, the danger zone, overbought euphoria. So when that internet hype machine kicks into overdrive and a price just goes completely vertical, how do we know, mathematically speaking, when we've entered that danger zone? Well, we watch that 0 to 100 scale. The second the RSI climbs and crosses above that 70 mark, a massive red flag should be going off in your head.
For sure. Because anything above 70 means the asset is officially overbought. The temperature is boiling, the market is in a state of absolute, unadulterated euphoria and greed. At this point, everyone thinks the asset is just going to go up forever, and rationality? Well, rationality has completely left the building.
Now, what's genuinely fascinating here is the stark contrast in how people behave when the temperature hits these extreme levels. Let's say the RSI is pushing way past 70, up to, say, 85. Look at the amateur. The amateur sees the price flying, they're reading all the hype online, they feel that massive FOMO, the fear of missing out, and they just emotionally buy in. They are literally buying the absolute peak of the hype.
Exactly. But then look at the architect. The architect checks their chart. They see an RSI of 85. What do? The architect smiles, closes the app, and absolutely refuses to touch it. Why? Because the architect knows, mathematically, the asset is running out of buyers. Think about it. When everyone who wanted to buy has already bought out of pure euphoria, there's literally no one left to push the price higher. A violent crash isn't just possible, it's likely imminent.
You really need to burn this rule into your memory. We do not buy at the top of the roller coaster.
Oh, 100%. Buying into FOMO when an asset is heavily overbought at an 85 RSI, that is a surefire way to become a casualty on the financial battlefield. You are literally stepping up and buying someone else's exit liquidity at the absolute worst possible moment. The architect flat out refuses to play that game.
Which brings us to part two, the strike zone. Oversold panic. Now, if the danger zone is all about avoiding casualties, the strike zone, well, this is where you actually build your wealth. Imagine the absolute worst news hits the market. Pure panic sets in. Everyone is rushing for the exits, and the price just plummets.
Right, and as that price crashes, the temperature of our market thermometer crashes right along with it. Once the RSI drops below the 30 mark, the asset is officially considered oversold.
At this level, the market has entered a state of sheer irrational fear. The
The people who were going to panic sell, they've already sold. Mathematically, the sellers are just exhausted. That downward pressure is completely running on fumes. And honestly, this brilliantly illustrates the difference between losing and winning in the markets. Let's look at an extreme scenario, okay? Say the panic pushes the RSI all the way down to 20.
For the amateur, an asset with an RSI of 20 looks like a total, unmitigated disaster. The headlines are screaming that the sky is falling, so the amateur is completely paralyzed by fear. They might even panic sell their own holdings at a massive, massive loss. But the architect? The architect sees the ultimate buy signal. They know the asset is mathematically on a massive clearance sale, and they know this is exactly the temperature where the whales are about to step in and scoop up the discount.
So let's get into part 3, the execution strategy, the architect's filter. It is time to take all this theory and put it into practice. Here is your specific cognitive task for today. Step 1, open up your financial app or trading platform. Step 2, find the indicator menu and just add the RSI to the chart of your favorite stock or crypto asset. And step 3, well, this is where the light bulb is really going to go off for you. Scroll back in time, look at those historical charts, find the moments when the price suffered a really massive crash. If you look closely, you're going to notice how the RSI dipped below 30 right before the massive recovery took place. Seriously, you have to verify this with your own eyes to truly build the confidence you need to act on it. Because once you see that history, you can start applying the discipline for the future. We call this the Neuro Fitness filter for large orders. Consider these your strict, non-negotiable rules of engagement from here on out. Rule number 1, before you ever execute a large buy order, you always check the thermometer.
Absolutely. If you open that chart and the RSI is screaming 80, what do? You put your wallet away. You refuse to be the amateur. Instead, you wait. You wait for the inevitable panic. You wait for the RSI to crash down into the 30s. Look, it requires immense patience and discipline, but I promise you that is exactly what separates the winners from the casualties.
Which brings us to our final, golden neuro fitness rule. Architects never buy out of FOMO when the RSI is 85. They wait for the blood in the streets when it drops below 30.
You now have the mathematical thermometer to measure the madness and guard your capital. So, the only question left to ask yourself before your very next trade is this. Are you going to be the amateur endlessly chasing green candles, or are you the architect patiently waiting for the perfect moment to strike? Master the RSI, master your emotions, and we will see you in the next class.